Hey boys and girls, just a general market update. So as some of you know, I've been following the US dollar because if the US dollar goes up, everything priced in the dollar goes down, i.e. all assets go down. Now, obviously, I do think there's some sort of a cap to how high the dollar can go. There seems to be a fairly big confluence level here where all of these resistance levels confluence. There's a bit of a focal point. Words are not my strong point. So I don't think the dollar can go on forever. And so eventually, when or if it rolls back down, it could send stuff sky high. But until then, dollar's very bullish because of quantitative tightening and all that sort of stuff. And as a result, we've all sorts of stuff is happening. Stocks are dumping, yada yada yada. Looks like a high. Interesting how some of these patterns look rather double toppy. Anywho, I guess there's a few things I want to talk about. One is base support. I go on about base support all the freaking time. As you can see here, base support, and then when base support is broken, there's nearly always a Kobo. And here, oil, Kobo, smash through it, pull back to kiss off the previous support, and then buggered off. Kiss off, bugger off. Remember, oil is one of the canary birds of global risk in times of pending or recessions and global crashes. And so every single time in history, pretty much, I think, or at least over the last 70 years, that we've had a recession or a pending recession, and the Fed has hiked rates into that recession, and there's been a massive spike in oil prices. It's 100% market crash, and what we've had is a massive spike in oil, very high prices. Anything above $100 is not good for the world, basically. So it rallies, and then oil eventually crashes because the global economy slows down, less oil is being used, and that's what we're seeing right now. The other canary in the coal mine is, I'm typing canary here, copper. Obviously, when the economy grinds to a halt, guess what happens? Stuff gets breached, and there's all sorts of levels getting breached. Hey, look, copper's literally followed my squiggles. I'm just going to shut my door. My kids have just got home. Stand by. Back in the room. So I've been forecasting a bit of a tumble for a while now. Now let's look at Bitcoin. You can see several key support levels being breached. We didn't get a Kobo as such with that one, and this one, here we go, we definitely have. Not only that, we have a high test. When it's a lot clearer in the 4-hour chart. We had clear breach, pull back, and then bugger off. So lovely Kobo. So this is why last night I placed a whole bunch of trades. So this was late last night. Added to my Tron short, Link, all that sort of stuff. GMT short, near ETH short, GST, loads of. This was late last night. Some of them were, at least, so what's happened is that we've had the Kobo and it's fully played out. Now, admittedly, I've had two trades that stopped me out really frustratingly. As you can see here, if we look at, where's my ETH one? Yeah, here. So I shorted a few hundred ETH here. My stop loss is 111.0. What was that? I can't even see that. 11.03. Took the screenshot of where I put my stop loss, and what happened is that ETH basically stopped me out and then absolutely buggered off. We had exactly the same thing with GMT. Look at that. That is really frustrating. Where's the GMT short? Yeah, I was trying to catch the pullback. Which I did, but stop was a bit tight. I should have, in hindsight, I should have put it above this big old 900 level. Hey ho. However, things are going all right. So I think about 100k up at the moment, which is good. But the one I want to talk about is Link. So I put here on my 14. I only just updated it. So this was 15 hours ago. I said, love these types of setups. This is a cracking short setup on Link. High test forming, maybe, but it's around the neckline of a nice head and shoulders. and it's already breached major support and Kobo'd off it. Beautiful. So what's happened? We had this massive base support. We definitely breached it. It breached, it Kobo'd, and that Kobo there created the right hand shoulder of this head and shoulders, which gave it another sort of neckline around here. And late last night I saw this high test forming, so I shorted it there, stop above that local high, and I'm expecting further falling. So when we look at Link right now, it's basically done exactly that. This is normal. This is part of the pullback. So when I drew this line here, so that is my... We'll always see a pullback to this level, maybe two, or it could just be one or two. But it looks like we've already had... Yeah, we could possibly get up into this level. If we have a pullback to that level there, where we have the confluence of resistance there, hell, you need to short that shit big time. But either way, that Link trade, where has it gone? About 15k up. Yeah, it's gone down a bit now. So, hey ho. Other than that, when looking at the bigger picture, yeah, I see a bit, whoopsie daisy, a bit further falling to come. Now I could bore you with on-chain stuff. I mean, God, this base support's being broken freaking everywhere. I mean, look at Algo. That is one hell of a high test there on the daily chart. But yeah, I think the main thing I want to show you is this one. I mean, I've got my whole dashboards and stuff, but now's probably not the time. In fact, there's two things which are very important. Look at the amount of Bitcoin that's flowing out of the exchanges into into private storage. Absolutely huge. That whenever you see that amount of Bitcoin being taken off exchange, it normally signals the bottom. Every single time we have mass exodus of Bitcoin from exchanges, you nearly always have rallying. Look here, right in the... Yeah, all of this accumulation here into private wallets, and then the price goes up. Here, price goes up, and we're having a massive exodus here. So that's quite interesting. But really, there is one indicator out here which has a 100% track record, which I somehow deleted it today by accident. Let's just get back to the top, go to charts, type in realized, nope, because it's American, they can't spell, Z, there we go, realized price, this one, here we go. It's a bit easier to see when you just put it as a bar here. So long story short, if I just take is this up? Yes it is. I'll take a screenshot of that so I can doodle. That's not the screenshot I just took. I think my computer's being stupid. Take another screenshot please, computer. And then go over here, Control V. There we go, much better. So, this is the realized price against the price of Bitcoin. So the Bitcoin price is the dark one. Now, the way that you read this is pretty simple. Basically, every single time, come on, I have fat fingers. Come on, back to 100% please. Every single time the price of Bitcoin dips below realized price, you got to buy. And every single time it's done that, you see a rally. So you see massive rally, little rally, and so I'm expecting rally like so. Yeah, but the thing that I want to share with you here is that it can dip below realized price for a couple of months. So it can definitely go a bit lower. So if you were to take this one where it was down the longest, let's just zoom into here. Average price is around 320, I say, and it's really January 15. Yeah, best part of the year. So it can fanny around for quite some time. And if you look at the range of that, it goes from sort of all the way down here to 310 to 320. You're looking at something like a 10 to 15% oscillation during this this range. So it goes, yeah. So if 10, what is that? If Bitcoin's hovering around sort of 20k, 10% oscillation is 2,000. So yeah, we could easily see Bitcoin fanning around and dick about sort of plus or minus $2,000 or a bit more. But historically, from an on-chain analytics perspective, now is a absolutely cracking time to start buying or pound cost averaging in. Cool, I hope that helps. Chat soon. Toodles, bye.